Whoa, gold coins everywhere. Wow, yes, because price is bullish, baby, as Jason would say. All right, we're going to be covering a couple things here. A, Coinbase and privacy, and deposits on exchanges at record lows. Related? You be the judge. Because according to the latest data from glassnodes, we've used glassnodes quite a bit on the channel, and I bought a long-term subscription to them a while ago so that I could have better data for the show. Reserves, that means deposits of Bitcoin. I'm not going to be talking about any other digital assets right now, just Bitcoin, the king, the Lord, the Savior. Just kidding. On deposit at exchanges have fallen to the lowest that they've ever been in the last year, 12-month lows. Okay. Now, of course, this coincides with, what blew up on Twitter over the weekend. Well, a few things about Coinbase. So let's just cover one thing first. A, it could be objectively said that Coinbase is experiencing what we could call a run on the bank, right? A run on the Bitcoin bank. Users rushing back to the platform on Coinbase to withdraw Bitcoin and send it elsewhere in record numbers, right? Now, this certainly has something to do with the news that broke over the weekend when it was revealed that Coinbase may or has entered into agreement. Some of this is up in the air, but Coinbase is in agreements to sell their blockchain intelligence arm, Coinbase Analytics, to entities like the Internal Revenue Service and the Drug Enforcement Agency. Remember, they acquired Neutrino not too long ago. And of course, this created a absolute firestorm on Twitter of privacy and virtue signaling and this and that and a lot of noise. But following these reports, there was a surge in Bitcoin outflow from the exchange. I do want to point out here, though, that we'll be looking at the glassnodes data here in just a little bit. And you, however, although you do see a surge, you can clearly see that this is just an exacerbation of a trend that has been ongoing and one that we've been talking about for a while. This whole idea of Bitcoin outflowing from exchanges, not just Coinbase, has been going on for quite some time. This coinciding with institutional interest in Ethereum. Look at the ETHE. Look at the massive premiums on ETHE, for example, the Grayscale asset, the Grayscale Trust, and as well as GBTC, the Bitcoin Trust as well. Massive volume pouring into those. And overall, an outflow of Bitcoin from exchanges, indicating that long-term holders are signaling that they do not want their Bitcoin on exchanges because they know that that's dangerous and they intend to hold their Bitcoin for the foreseeable future. And most likely the logical investment decision here or reason is as a hedge against inflation, because obviously that is hot in the news. We are in late stage empire activity. We now have stimulus. We now have direct payments to the body populace, particularly here in the United States. This has already been ongoing in other countries. And overall, now we're seeing protests and riots break out. This is what happens when a nation debases their currency. Now, getting back to Coinbase and this whole idea of them selling user data, right? Of course, like any other broker or exchange. Remember, so this is a little different. I think the perspective on this is a little different from those who have only entered into cryptocurrency and don't have experience in other markets. For example, if you trade Forex, to sign up for a Forex exchange, you have to do KYC AML. So that social security number is going in there, right? That photo ID, that copy of your of your utility bill is going in there. Same if you register on Kraken, right? Kraken's no different. So these exchanges have a trove of data and information, right? That they give to the government, right? If you think that Coinbase was not submitting data or planning to submit data or holding back data to submit to the government, to CYA, to cover their own ass, then you're insane. This is one thing that I kind of disagree with. This is certainly baked into the cake when you register that Coinbase account. You are no longer operating in privacy, right? Coinbase is there for convenience and normies. Andreas Antonopoulos and his, I can't remember her name, the other host of the Let's Talk Bitcoin podcast, they have a great metaphor for this called the sovereignty staircase, right? First off, the government already knows all your data, right? If you're using Google, Facebook, Twitter, you're not running a VPN. You don't use digital identity. You don't use any kind of online really security or privacy. You're browsing on your phone. You've got location on. All of these things that 98% of people do. Then all your data is already out there. But Bitcoin allows you the opportunity to do that. So let's say, for example, like I'm going to make a pretty controversial stand right here. If somebody comes to me and asks how to get involved in Bitcoin, I am going to recommend that they go set up a Coinbase account, right? Because that's going to get them in the door. And then after they're familiar with utilizing Coinbase, I will approach them and say, now, if you want anonymity and privacy, Here's how to download Wasabi wallet. Here's how to utilize CoinJoin. Here's how to use Tails. Here's how to set up an Electrum wallet. All of these things to enhance anonymity and privacy. Here's how to get a hardware wallet, buy a crypto tag, all of these things. Because I think that is the next logical step. To say, though, that Coinbase doesn't represent a valuable service to onboard individuals into the market and A, make number go up, which is good, and B, just get more people in the door, I think is silly. That would be like saying, no, man, you shouldn't trade Forex because you can make money, but you got to give them all your social security data. It's baked into the cake. Like, you know that. There are ways to engage in cryptocurrency and Bitcoin completely privately, but the reality is most people aren't going to do that. While I advocate for digital security and privacy, I think that people are doing more harm than good when they take a radical approach to that, right? People need to become accustomed and familiar to that, and that needs to be baked into the cake. I think utilizing cryptocurrency makes that more normal for them. Now, of course, Coinbase has a trove of valuable user data, right? And that is because it does compliance with the strict KYC policies that are required by international law and the United States. Obviously, this outflow of BTC from, and first off, that's kind of silly too. Like, certainly great, you know, if you don't support Coinbase, don't support Coinbase. But if you are taking your Bitcoin off of Coinbase, like, that's not going to stop them from giving your data away. They already have it. Okay. But of course, investors are worried that this deal that Coinbase wants to do with its analytics firms is going to jeopardize their private user data. But again, it's debatable, highly debatable, if withdrawing and abandoning the platform now is going to do anything to protect that user data on file being spun off and sale to the United States authorities. Let's take a look at our first link here. Kind of coming off the back of the panic over user data. In this report from Block Crypto, Coinbase has stated that their analytics operation, first off, doesn't hold any user data from the Coinbase or Coinbase Pro exchange. All their analytics data has is analysis of publicly available user data. I think that's probably a stretch. I think it's certainly probably more than that. So I feel this is a little disingenuous. Any KYC AML exchange, you have to understand that if the government or authorities come in, they're gonna roll over. They're not gonna fight for your privacy because it's not in their financial interest. Right? It is very rare and few and far between that some centralized entity is going to stand up for your individual privacy rights, which is why you have to do it, right? If you want to be anonymous and private, you cannot trust Coinbase to do this for you. This is irresponsible, right? This goes against any kind of ethics of personal responsibility or even kind of a cypherpunk ethos, right? Trust, not verify. And if you're trusting on Coinbase to hold your data private, and now you've pulled up your veil, right? You're fainting because they're going to sell data, which is financially prurient for them. I think that's kind of silly. But most analytics companies are going to be monitoring all blockchain analytics companies monitor addresses that have been involved with fraudulent or criminal activities like security breaches, hacking attempts, and that is to track the flow of illicit funds. Like we have reported this multiple times. Funds stolen from these exchanges are blacklisted on exchanges so that they are not utilized to launder money because the exchanges do not want money laundered that was seized kind of ill-gottenly from their exchange. Unless, of course, you're Bitfinex or BTCE or whatever, right? And there's financial incentive for you to do so. But this type of on-chain data is, of course, important to the exchanges like Coinbase. And that helps them prevent, as I said, any kind of proceeds from ill-gotten gains getting laundered on their platform, because that is going to get them in hot water with the authorities. And their goal is not to do that. Their goal is not to preserve your privacy. Their goal is to look after their own profit motive and be their own functioning entity. Companies like Chainalysis and CipherTrace, we've talked about these, they use publicly available blockchain data to actively track the movements of all kinds of transactions of cryptocurrencies like Bitcoin and other cryptocurrencies. So it's not a big stretch to say that a good chunk of Coinbase's analytics is utilizing that data. They are making the case, they are arguing, Coinbase is claiming that, listen, our analytics company is no different. We're not using any personal data from the exchange. That is completely separate and different. While that may be true, that doesn't really change the fact that if the authorities approach Coinbase, the Coinbase exchange, request data and win, they're going to roll over. They already did with the IRS records. Remember this, Coinbase has already rolled over once, even though let's say they fought it. Let's say they fought it. Okay. However, a lot of users apparently are not satisfied with this, not satisfied with the reassurances that their user data via the exchange is going to remain safe, because even Whale Alerts spotted several multi-million-dollar transactions that were outbound from Coinbase addresses to unknown wallets, right? And it's possible that this exodus from Coinbase is an isolated case. However, as I said earlier, this is an exacerbation of an undeniable trend forming across crypto exchanges since March of 2020. And that is when outflows of Bitcoin from major exchanges have begun consistently increasing. This suggests investors are positioning themselves to hold rather than to sell in the short term, unless we're just seeing like a massive increase in derivatives volume, right? Let's look at our second link here. This is a tweet from Glassnode where they say Bitcoin balances on exchanges just reached a one-year low of 2.3 million Bitcoin. So Glassnode points out in this recent tweet that on-exchange balances of Bitcoin reaching one-year lows of 2.3 million Bitcoin. And one glance at this chart they posted, we can see how dramatic this decline in deposits has been, right? One might think that these climbing withdrawal numbers are indication of a highly optimistic sentiment among Bitcoin holders for the price in the medium to long term. You would pull your funds off of exchanges if you were planning to hold for a significantly longer period of time. Now, typically, reserves or deposits of Bitcoin for exchanges enter somewhat of an accumulation phase, right? If we look at early 2019, when Bitcoin's price was hovering around $4,000, as price began to climb, where it eventually reached $14,000 in June of 2019, the amount of Bitcoin on exchange balances dropped substantially over that time, right? Because eventually buying demand overtakes selling pressure because investors continue to move their funds off of exchange. And the daily sell-off from Bitcoin miners gets absorbed by the buying volume, right? Speaking of selling pressure and miners, selling pressure from capitulating miners. If we look at Tour de Meester's recent tweet, right? He's pointing to Glassnode's miner outflow multiple, which is actually a new metric that they just added recently. This is tracking the volume of Bitcoin flowing out of popular mining wallets, and it suggests that struggling Bitcoin miners have little to no Bitcoin really left to sell. He says healthy Bitcoin miners are hodling, and struggling miners have little Bitcoin left to sell. Bullish. Let's actually go take a look at that chart from Glassnode's itself. Here's the miner outflow multiple from Glassnode's itself. All right. And what do we see? It only takes a cursory glance at this chart to see. As we can see, so the yellow is the 7-day moving average of Bitcoin outflowing from significant miner wallets, and it is at a relative low. This indicates that there is not a lot of selling happening right now for miners. So this whole catalyzing capitulation of miners narrative was wrong, right? Bitcoin miners are hodling. They're hodling the Bitcoin that they are currently mining at a loss, and struggling miners are not selling BTC. Very, very little. They've either run out or they're not. So kind of in conclusion, if the balance of Bitcoin on exchanges doesn't increase, if this kind of trend doesn't V-bottom or change in the near future, then this is raising the probability of Bitcoin actually entering a proper accumulation phase. And of course, we talked about the Puel multiple for the last few weeks. The Puel multiple entering into its period of accumulation, indicating that current price activity, current price range was a good time to begin establishing long-term positions in Bitcoin that should be held for over a year. This in good conjunction with the signal from the hash ribbons indicator as well, right? So a lot of higher time frame indications and good on-chain fundamentals, pointing to it being more and more probable as time goes on in this post-halving environment, that Bitcoin is far more likely to actually break up to the upside here and enter into a proper multi-year bull market like what we saw in 2016 and 2017 post the previous halving, okay? So, things to watch for this amount of Bitcoin on exchange to continue falling, and maybe you're noticing it in your own mind. What makes more sense for you? Does it make more sense for you to keep your Bitcoin on the exchange? For example, Coinbase, knowing now what you know about what Coinbase intends to do, regardless of the fact that it's questionable that actually pulling your funds off now will protect you in any way from your data being sold. However, does it make more sense to you right now, because you are existing at this period in time, you watching this video right now are existing at this moment in time with the current sentiment, with the current drama, with the current knowledge that you have in your head? Are you more bullish than bearish? Are you selling your Bitcoin at these levels and sitting around fearful, waiting for the next shoe to drop? Or are you looking at the market thinking this is going to break up? I am backing the truck up right now. And if you're in the latter, I would say that the fundamentals are starting to align for you, and that moving forward, 2021, 2020 just might be a beautiful year for hodlers. With the amount of Bitcoin on exchange and on the order books continuing to drop, coupled with this declining selling pressure from miners, as well as growing institutional appetite for holding cryptocurrency at stock market highs, these factors could catalyze the next major cycle in cryptocurrency markets. What side of history are you going to be on? Let me know in the comment section down below. Thank you.